Hi guys, my name is Bet. Let's continue our technical analysis of Forex for swing trading. Okay, so currently we are looking at the USD index chart. As you guys always know, I always with the starting off determine the overall strength of USD. So right now we have the as consistent as the last several days, we have the lot of candles behaving consistently below the moving average, meaning that USD is getting weaker overall against other pairs. Okay, so let's write it down. USD index trend is down. That means that we're gonna look for opportunities to sell USD. So USD, now let's analyze each pair individually. USD Japan yen. So we have the nice sides down leg continue like this. The market has retraced into a good zone between 0.618 and Fibonacci retracement 0.38. So right now it's a really good zone to sell USD against Japan yen. In the United States, we are still facing the issues of the DX trade, the migrations. Because of that, I'm not able to trade. My prop firm says we will wait another 2 weeks. But if you guys if you guys are available to trade, right now USD Japan yen looks very good to sell. So ideally, it should return to original trend soon and hit some Fibonacci extension somewhere. Of course, if you're selling USD Japan yen, my stop loss would be above the local minimum, local maximum above here, and the minimum take profit would be Fibonacci extension 1.618. Okay, let's write it down. USD Japan yen trend is down, leg size is nice. I would definitely sell. Right now market is at the Fibonacci retracement 0.38. It's a really good zone to sell USD. So your risk and reward ratio would be about the 1 to 4 around there. So now let's take a look at the USD Canada dollar loonie. Okay, so we have nice down leg like this. The market has retraced it into a good zone around the Fibonacci retrace 0.38. So currently we have about 6 or 7 candles above the moving average, and the market is price action is barely exceeding the moving average, right? So that is still considered the fake out, and as we know, the market likely very likes to do fake out. So it should hang out here a little bit and return the original trend and hit some Fibonacci extension. So right now, and also USD Canada dollar looks very good to sell. But of course, just in case, we have more than 10 candles above the moving average, and if you see a big up candles like this, then of course it will be considered the trend reversal, and that would, at this point, I would take loss and close the loonie position. So if you are selling, your take profit would be Fibonacci extension 1.618. Your stop loss would be above the local maximum point here. So right now market is faking out and it looks really good to sell loonie. Okay, so trend is still considered down. Market is doing the fake out. Leg size is nice. It's around the Fibonacci retracement 0.38, and which is a really good zone to sell. Okay, now let's analyze the next pair, USD Schweizer franc. Okay, so right now we have down leg like this, but I don't like the size of this leg. It's too small, and when there is a small leg, market can easily make a new local minimum or maximum point. So that's why I wouldn't recommend sell USD Schweizer franc. So technically speaking, we have few candles hanging out above the moving average, which is still considered the fake out. But since the leg size is small, I wouldn't recommend selling USD Schweizer franc. So USD Schweizer franc trend is still down, market is doing fake out, leg size is too small, that's why we are not touching USD Schweizer franc. Okay, now let's analyze the pound USD. Okay, so we have really nice up leg like this, good sides, and market has retraced it into a good zone about the Fibonacci 0.5 retracement, and which is a really good zone to sell to buy pound USD. Ideally it should hang out a little bit and return to original trend soon. So if you're if you're buying a Great Britain pound, your stop loss would be below the local minimum here, and of course your take profit would be Fibonacci extension above here around the Fibonacci 1.618 extension. Okay, now let's write it down. Pound USD trend is up, nice. I would definitely buy if I have a chance. Pound USD. Okay, now let's analyze the Euro USD. Again, the same story. We had the original up leg like this, the market retraced into a good zone around retracement 1.618, and I've been calling when market was hanging around here. I've been telling in my videos to buy Euro USD, and since that market has returned into original trend like this. Now also from this new leg, market also has retraced it into a good Fibonacci zone around the 0.5, and which is a still good zone to buy Euro USD. So at this point, if you have already have a buy position on Euro USD, I will update my stop loss into a new local minimum point here, which should give you additional position or bullets to trade the more positions. So right now market is around the Fibonacci 0.5 retracement, which is a really good zone. Ideally it should return to trend soon and hit Fibonacci extension 1.618 up here. I hope you guys have been following my advices, and I read the market 70% of the time correctly. So Euro USD trend is up, leg size is nice, and I would definitely buy it. Currently market is retracing in a good zone in 0.5 retracement, and if I have a chance I will also buy Euro USD. Okay, now let's analyze the next pair, Aussie. Okay, so Aussie price movement is still considered the down sideways action. There is no obvious trend because here we have a lot of candles hanging out above the moving average, but market didn't go up, and we have also a lot of candles hanging out below the moving average, but market didn't go down. Instead it returned up, right? So it's a ideal behavior of the sideways actions. So I wouldn't be surprised market behaves like this, then gets into up movement again, then down movement again. So there is no clear trend indication right now. Market is still doing this sideways action. So when there is no trend, we're not gonna trend. So that's why I don't have any positions on Aussie. So Aussie market is doing sideways action, no trend. No trend means no trade. New Zealand dollar USD. Okay, same story. So we have up movement like this, market didn't go up, then a lot of candles below the moving average, market didn't go down, up, down, up, down. So it's a perfect example of the sideways action. So I wouldn't be surprised if market is seems to go down like this, then it will should go up like this, then go down something like this, because market is doing the sideways action until the market shows the clear indication of a trend presence, and we're not gonna force any trade. New Zealand dollar USD still market behavior sideways, and that's why we are not trading. Okay, so what do we see from this spreadsheet? So definitely USD index is overall still weak, and if there's market doesn't change its state or behavior 80% of the time, if it's still trending down, and tomorrow you can expect it to still expect to continue in the same trend, and market 80% of the time doesn't change its state. Okay, so overall USD is definitely weak overall, and Japan yen, Canada dollar, some of the pairs showing a fake out, which is totally normal. Market likes the fake out, and currently they are all USD, Japan yen, loonie, pound, euro. They are all in a really good zone to sell USD. So if you're able to trade, I would definitely recommend to sell USD. Again, don't forget the stop loss. For some reason tomorrow we don't know what market will show. If there is 10 really strong candles happening on the other side of the moving average, and we will just be a man, take the stop loss, and prepare ourselves to trade in the new trend. So don't forget the stop loss. And right now, as of this moment, market really looks good to sell USD. Okay guys, see you guys on Monday.